Hey, welcome everyone. Tom here from Park Avenue Trading, and today I'm going to show you the only trend strategy that you will ever need in foreign exchange trading, or any trading really for that matter. I've gotten a lot of questions about, like, how do I determine what the trend is? I don't know what the trend is. The first thing that I want to say is that I do not use any indicators whatsoever. I use price only. For me, indicators are just nothing more than a mathematical manipulation of time and price. A moving average, you've already seen what happened. It's already occurred. And just because it's an average, for me, it doesn't mean anything for me. So I really just stick only to price. And this technique that I'm about to share with you was not mine. It was actually, I read about it first by W.D. Gann a long time ago, where he was talking about a two-bar type of strategy to use to determine what the current trend is going to be. Then I read about it from Larry Williams, which was a three-bar strategy, and Larry also talked about a six-bar strategy. And I think the combination of 3 and 6 makes a little bit more sense to me. It's a little bit more conservative. And without further ado, let's just get into it. But first, let me light the cigar up, because the only way I can think is if I got my cigar going. Plus, I want to share something with you before we get into this. So, there was an old Wall Street joke, and when people try to make foreign exchange trading extremely complex, it reminds me of this Wall Street joke. Albert Einstein dies, he goes up to heaven, and St. Peter's at the gates. St. Peter says, "Can I have your name, please?" And Albert Einstein says, "You don't know who I am?" And he says, "No, I don't." He goes, "Well, I'm Albert Einstein." He goes, looks on the list, and yeah, come on in, you're in. Because unfortunately, your accommodations aren't ready yet. You're going to have to wait in the waiting room until we get everything ready. So St. Peter takes him to the waiting room, and he's standing in the waiting room, and a guy comes up to him and says, "Oh my God, you're," no pun intended, "oh my God, you're Albert Einstein." He goes, "Yes, I am." He goes, "And what's your name?" He goes, "John Smith." "All right, John Smith, what is your IQ?" So John Smith goes, "My IQ is 140. He goes, 140, that's excellent. We could talk about music, we could talk about arts and ballet, and we could talk about mathematics. Another guy sees him, comes running across him, says, "Oh my goodness, Albert Einstein, how are you doing? I'm Tom Jones." "Oh, nice to meet you, Tom Jones. What's your IQ?" He goes, "Oh, my IQ is 104. He goes, "Oh, that's fantastic. We could talk about football, baseball, soccer." He goes, and then Albert Einstein notices this guy that's sitting smoking a cigar on this beautiful lounge chair, nice suit, dressed immaculately. Goes over to him and says, "Hi, sir. My name is Albert Einstein. What's your name?" "My name is Bob Dylan." And he says, "Oh, Mr. Dylan, can I ask you, what's your IQ?" He says, "My IQ is 70. He goes, 70? Oh, fantastic. How's the Forex market doing?" So, we are not sophisticated and bright people, okay? I mean, we're not here to solve the equations of the universe. We're basically here to determine what price action is and how we can make some freaking money off of it, okay? So what we need is some guidelines, some rules that basically try to help us determine what is going on in the marketplace so that we can grab 100 pips, 200 pips, or, if we get lucky enough to grab a 500 pip move, fantastic. Even if we grab 60 pips, that's wonderful. You can do 60 pips a day. You're doing just fine. You're fine as long as you're not losing more than 30 pips to make the 60, okay? So it's always the R factor. It has to do with also what you're risking. All right, so let's get into the simple technique, the non-Albert Einstein technique. Okay, and the technique basically is a 3-day swing pattern, okay? And really, all it means is if the first, and I'll go over this more detail when we kind of like go through this, so you can kind of understand, because there are, in what we're really looking at is a short-term trend, and then the short-term trend can turn into a long-term trend as long as a peak or a valley gets broken. Okay, so right here is a price high, that's a peak. Okay, here is a valley or a price low, and that price gets broken. That's basically showing that the trend is downward at this point. It's not that the swing is downward, it's the trend is downward. But so that would mean that we want to fade the rallies up. All right, that's basically what it comes down to. So I'm doing this on a daily chart, US dollar yen. I just picked this part, in the chart from 21, because my real chart up here, up there is all full of trend reactionary numbers and stuff, and I didn't want to erase them because they're important to me, and I'm too lazy to put it back on. So anyway, let's just get on with this. Let's say, for instance, that we entered the marketplace on this day. We came back from holiday and we're trading Monday the 19th of July 2021. The first thing that I do is I just go back 3 days. One, 2, 3. And I say, okay, what's the high and the low of the last 3 days, including the day, we're actually starting this day, I'm sorry, we're starting actually Tuesday, July 20th. What is this day? It's July 19th. We're starting July 20th. This day here we're starting. So I count back 1, 2, 3. Basically what I'm saying is I got the high right here, okay? And I got the low right there. That, for this day, is basically telling me what the resistance level is and what the support is. So if I count back 1, 2, 3, I get this point right here is the highest high for this day, okay? And I also get my low right here. So basically I should be finding resistance up at this point on this day if it goes up there, or I should find support down here on this day if it goes down there. All well and good. It doesn't. It's an inside day. So nothing really happens. So this day closes, and what I'm going to do is I'm going to go back 3 days. 1, 2, 3. Okay, and now I got this same high that I was looking at, basically. Same high right there. So on this day I should find resistance at this point. Now remember, we're only talking about like what's going on as far as the swing is concerned. In other words, market's moving up, but the trend hasn't changed. Has not changed yet. The trend is only going to change when basically we pop this highest high that we got, which happens, as you can see all the way to the right. It happens a month or so late, 2 months later. But so the marketplace was in a really tight range for the last month or couple of months or so. So here's the high that really I'm looking at. All right, so when I have this day right here, you notice that we popped into 1, 2, 3. We popped into this high right there, and it failed. It didn't go through that day. So now if I'm looking here, the next day starts. I go 1, 2, 3. This is the high that I got to get through to kind of show that there's strength. Okay, the marketplace does move up. Now it moves up from 110.37 to 110.59. Not much of a move at all. Now remember, this is basically saying that today, that the day that I'm trading this, I know that I'm going through that top. Most likely I should be looking to buy dips because I went through the top. Market should be going higher. How much higher, we don't know until the marketplace actually, well actually you couldn't calculate that. You could use trend degrees and things like that, but I don't want to get into that right now. So I'm just trying to show you the simplest way to look at trend in a swing versus trend in a trend change. Okay, so the marketplace makes this new high. Remember, now this is where the king and the queen come in. All right, now this is what I was talking about in Forex Confidant when I go over the open indicator. The day that my finger's on right now is the day that the marketplace broke this really short-term high. Okay, now there's another high right here. okay, right behind it. It did not break that high, but it did break this short-term high. And it gave a short-term move. That's fine. So this was the king because the marketplace closed above that high. But the next day, which is the queen, she said no. And she went down. She went back down into the range. So here's the day that we're starting. If we go 1, 2, 3, this is the low that I'd be looking to say that there is a swing change direction back down. Okay? And it happens actually on this day, 1, 2, 3. Okay? On this day's open, 1, 2, 3. It's right there was the swing change low. So in other words, this day closed. Now I'm looking at 5 o'clock. I go, all right, what's my 3 days? 1, 2, 3. And I'm sorry, it's this one right here. That's basically the one saying that the direction has now changed in the swing to a downswing. Now you say, what are you talking about? Well, it broke it, but on the next day it went up. Yeah, it went up, but it's still basically a downward swing with an upward sloping day. It happens. It's a perfect day to be looking to sell resistance. Perfect day. Where would be a good trend change indicator? A good trend indicator is, and it fails. Okay, so just to go to show you, all right. This day we go 1, 2, 3. We have this low, marketplace breaks lower. Next day you have a counter trend, an upswing in a downward swinging market. And then you have right here the break of this pivot low. All right, so if you kept doing that, you'd find a sale right there. Now you broke this pivot low. That pivot low is pretty important. Okay, the marketplace should have been saying downward at that time. Okay, and it didn't. And now you can make a million excuses for it. You can say, oh, I could be using this low over here, which is true. You could be using that low. But if you're just using like what we got right in front of us, this marketplace was saying like downward. Okay. Now here's where it gets real interesting. All right. This is where you can check. So what I'm going to do is I'm going to put Alt H across here. Okay. And this is where you can see whether or not it's a false move. Aside from using the 3 steps book that you should have, the free ebook that I gave you, where you can calculate it, because this was a down move, so therefore most likely it's a false break. But here's the other way you can do it. You could take the high of the day to the close. If you take just the high of the day to the close, it's right on the line. It is not below the line. That's basically saying this move is suspect. The high, because it's a downward movement, you take the high of the day to the close. Now, if the high of the day and the close was down here, the close was, say, down here, yeah, that's a valid break, and that's a valid trend change where we want to be selling rallies. Okay? So let's say from this low, we go 1, 2, 3. This is the point that we need to get over. The first day it doesn't happen. Here's the second day, 1, 2, 3. It's right here. It just touches resistance. I would be using the low to the close. And that's basically right on that line. It's amazing how it ends up like that. The low to the close, and what's the top? It's the top I need to get through. It's right there. It's right there. So I would go 1, 2, 3. When this day opens, it's still this point. This is the point, boom, where you say, we're breaking. I need to, basically buy dips. All right. And the marketplace takes out this high right here, showing that there's some strength here. Okay. The market did break that top. We still haven't broken this top. That's an important top because it's the highest peak that we have. I could actually use this low peak, but we went through that. So, and I got to show you a great little indicator, the high to the close, and it basically wasn't below it. So we have the first indication that potentially this marketplace is gathering strength. Now, it takes some time to do it. All right. So now, what's the rule? We got a high. We got the new low. Let me just move this down to here. We got the new low. Okay. In order for this marketplace to be saying it's a trend change where it's going to go lower, 200-300 points lower, It needs to break that point. When we broke this top right here, and we didn't close above it, but we did break it, okay? The market was giving us a warning sign, an early sign that, hey, there's some strength here. Don't be so foolish to start selling this thing at the bottoms. Be looking for places to buy it. You notice that this pivot is higher than this pivot. Very important. Marketplace comes up. It still hasn't been able to get through this high. Marketplace gets down another valley. It's higher than this. Marketplace starts to come up. I'm only going to go to this peak here. Look what happens once this peak is broken. Closed above and broken. Then it goes above this peak, closes above and broken. Then there's a small retracement, okay, which would fool a lot of people. But guess what? What does it need to go down to in order for it to say it's not going any higher? It's down here. So this is basically a downward slope in an uptrending market. Uptrending now, not swing. Uptrending because we broke this. Okay? So if I'm using the same 3-point system, 1, 2, 3, I need to get through this high. Over here, 1, 2, 3. It's actually this high itself. 1, 2, 3. It's this one. Then the marketplace breaks it and breaks this top, and then it continues higher. Now the opposite would be for downward movements. If you're making a high and then you're making a deeper low and then you make a lower high, it's a Dow theory all over again. You're making a low high and then you pass through that low. That's basically a trend change. It's the same thing here. Now you could use also, I don't want to make this video too long. We could use the 6-point. And I'll tell you what, I'll do another video on the 6 points. Basically, it's the same exact thing, only going back from the bar that's currently opening 6 points back and looking at the high and low and saying, okay, these are my demarcation lines. So I wouldn't need to do that video. But anyway, if you like what you see, please like and subscribe. Don't forget to ring the bell so you get more important information that I give you. I look forward to seeing you again. Cheers, Tom.